Hi, I'm Lawrence. I was always told to get a degree and a job at a good company, but just 3 years into my safe job, I was retrenched and left broke. That idea no longer works. Instead of one job, we need to be focusing on multiple streams of income. As a full-time property investor and coach, my goal is to educate you and other South Africans to reach financial freedom through property. Let's get started.
A very, very cool strategy known as your student accommodation market. Now, of course, and this is something I've heard or had a lot of questions about, is how COVID has affected the student accommodation market in terms of students working from home, etc. And it's hard to answer that because I don't know if it's a good investment at the moment. I know right now that people are selling, or investors are selling, their student accommodation properties at massive discounts because of the fear of COVID. So if you can pick up a property at the right price, it should be a great investment. But the risk you are taking is that it could take a couple of months for the student accommodation market to recover. It might be that we get our vaccines and COVID becomes a non-issue over the next 6 to 12 months. But, it might take another 2 years before students really feel the need or are required to go back to university. We are moving to a more online world. So, I don't know, you've got to find the balance, and you've got to see what risk and reward you're looking for and what you can stomach. So this example is in Stellenbosch, Western Cape. I've tried to analyze deals in all different types of locations and provinces to try and give you a flavor of what's possible. Let's have a look at this deal. I think it's a great opportunity. It's a 13-bedroom house. Let's have a look here. Also under offer, but that's fine. So it's a 13-bedroom house for sale in Idas Valley. I don't know how to say that. Let's just call it Stellenbosch. So 13-bedroom student accommodation investment. Let's see. The property has a potential to generate 42 to 45,000 Rand in rent. 13 rooms available at 3,300. So what I'll just do here is 13 times 33. Okay, so I'm going to work my numbers on that, on 42,900. Currently, there are only 10 of the 13 units. Okay, so the first thing I'll do here is 10 divided by 13. That means that 76% of the house is occupied. So that's going to become my void estimate, my vacancy estimate. I'm going to estimate pretty much about a 20% void cost because I can see already that it's only occupied up to 80%. Okay, let's see here. Rates and taxes of 2,500. There won't be any levies applicable on this deal. So we'll look at some of the pictures. So the first thing that I'm noticing here is that this is obviously just a big house or an old house that they've subdivided and repurposed for student accommodation, which is totally fine. That's actually a good thing. That means we'll probably be able to get a home loan on this. So a 90% loan should be quite realistic. What I'm also looking for here is the electricals. You can see that these look like relatively new and quite modern plug points. That's a good thing. I want to have a modern electrical system in my property, and I'm going to assume that it's then prepaid, which is also critical. When you're working with students, you want to make sure that your variable costs of electricity and water are being done through a prepaid system. Okay, so I'm also assuming that furniture and everything's included, which is great. Looks like there's a bed and a nice table for them to work on. There's built-in cupboards. So my offer to purchase, if I were to offer on this property, would be inclusive of furniture. That would be a subject clause that I would include. Fridge, desks, couple of beds. Looks in good condition, right? Looks clean. Bathroom looks okay. Bathtub, but I'm not really seeing much renovations. Maybe a clean and a repaint and just making sure that everything is working. So I'd probably just drive past this property, go view it, make sure that everything's in order, but I'm not seeing massive renovations, which is good. Okay, so let's run the numbers on this deal. I think on the surface it looks good, but I'm not sure if with the vacancy provision if it's actually going to make sense. Let's have a look here. Okay, so I'm just going to copy and paste my here. Asking price of 2.4 million. 2.4 million. I'd probably go in with an offer of about 2 million. Yeah. Okay, rental of 43,000. Step number 2, we go to our buying cost. Now let's assume, because it's an old house that's been repurposed into a student accommodation, that we'll maybe get a 90% loan to value from the bank because we can justify that we're getting a home loan. So we'll say it's a 2 million rand purchase, freehold no, and company tells us that our transfer costs are 120,000 rand. Okay, refurbs, I'm going to put about a 30,000 rand budget just for odds and ends. Maybe there's a bit of furniture that needs to be bought, or some finishings, or a bit of paint, or whatever it may be. It looks good, but just as an in case. Okay, 90%, I'm going to get it at, let's say, 10% interest over 20 years. Cash flow. Now the first thing is, look here, very exciting. It looks like it's going to be a big cash flow deal. I mean, we haven't inputted all of our expenses, but we've already got a 25,000 rand monthly cash flow, which looks great. So levies is 0 because it's a freestanding house. Levies only apply within estates and within shared buildings where you've got shared services like security or a gardening service. Rates and taxes, I think, was 2,500, so 2,500. Insurance, you're probably looking at about 800 for something like this. Now your void, remember that only 10 of the 13 beds are filled, so that's about a 76% occupancy rate. And also, students don't always rent for the full year. They sometimes rent for 11 months, sometimes even 10 months. So when you're looking at student accommodation, you want to budget usually a vacancy period of about sort of 12 to 20%, because that kind of protects you from students that only stay for 11 months or 10 months. So I'm going to go with, let's go with 16%. You know what, I'm going to go actually 18%. Management 10%, and maintenance 10%. Now maintenance is important to go for 10% because students tend to not look after the property as much as a family would. So yeah, we're looking at about 5,000 rand cash flow. Now what I saw on the pictures is it looked like there was prepaid electricity and prepaid water. That's my assumption. I obviously have to clarify that with the estate agents. If water and electricity is not on the bill of the tenants but on my bill as the landlord, then I would put that in here. I would put in the other tab, I'd put water and electricity amounts. Okay. So cash flow of 5,000 rand has dropped a lot, and that's mainly because of your void percentage, your void estimate. Okay, so your return on investment is 18%. Sure, which is not bad. How much capital do you need? Okay, you need 350 in terms of cash. That's because it's a low, that's because we've got a high loan to value. If I now go down and I say we're only going to get a 70% loan to value, sure, then the return on investment drops to about 15%. So that's still pretty good. Okay, I'm going to go back to 90%. Now, let's say after I speak to the estate agent and I ask them about the water and electricity, and the estate agent says, you know what, electricity is prepaid, but water is an additional cost. What I'd have to do is I'd have to go here to my other tab and I'd have to include a provision for water. So I'm going to say 150 per student per month. So that's about, let's call it 2,000 rand for the 13 students, which means my cash flow is now at 3,500. Let's see if my return still makes sense. Sure. So now it's dropped to 11.5%, which for student accommodation I think is too low. I would only feel comfortable with 15% or more. So you go back to step 1, you reduce your offer by 100,000. That should bump up your return slightly. Yeah, there we go. Can you see that it's sometimes a bit of a I don't want to say guessing game, but you have to be pretty fluid with how you run the numbers. You'll have to put some assumptions in place, but then you've got to refine your numbers, make some adjustments until you find the offer that meets your return requirements. And once you've got that offer, sign the offer to purchase with the right suspensive conditions and put out as many offers as you can until one comes back as a yes.
Are you tired of having more month at the end of your money? It's time to venture into property investing. And although it may seem scary, don't worry. We've created tons of resources to help you get started. From tools that help you analyze deals to online training courses to one-on-one specialized coaching. Click the link in the comments below and get started today.